Think about this. Every single month, you pay around $120 for your family's cell phone plan. A recent FCC report shows Americans spent over $300 billion on wireless services last year alone. $300 billion. But look at your phone right now. You might only have 2 bars. The internet might be slow. So where exactly did all that money go? Did it just vanish into thin air? We are going to track down every single penny of your phone bill today. And the truth is going to shock you, because the company you actually pay is only the tip of the iceberg. There is a massive hidden money machine operating behind your screen. So, who is really getting rich off your data? To find out, we have to start at the front lines. Imagine a college student today. Let us call her Sarah. She skips meals just to afford her $90 unlimited 5G plan. She absolutely needs it for her online classes. She pays T-Mobile every single month. T-Mobile is one of the biggest carriers in the United States. T-Mobile recently reported over $80 billion in annual revenue. You might think T-Mobile keeps all that cash, but they do not. T-Mobile has an incredibly hard job. They have to actually build a network to connect you. Now imagine a truck driver named John. He drives overnight across the country. He desperately needs a GPS signal in the middle of nowhere, just to do his job safely. To give John that signal, T-Mobile has to put antennas everywhere. But do they own the physical towers? Mostly, no. This brings us to a crucial financial concept called CapEx. CapEx stands for capital expenditure. It simply means the large amounts of money a company spends to buy or fix physical things, like buildings or heavy equipment. Building thousands of cell towers takes massive CapEx. It is incredibly expensive. So, T-Mobile decided to be smart. They rent space instead. But from who? Who actually owns the sky? That is our next clue. But first, let us see exactly what happens to Sarah's money. Let us break down a standard $100 phone bill. It is a perfect way to see the true money flow. First, you hand over $100. Immediately, about $15 goes straight to taxes and government regulatory fees. We are down to $85. Next, T-Mobile takes about $20 for their direct operating costs. This is to pay for retail store rent, massive marketing campaigns, and the salesperson who actually sold you the plan. We have $65 left. Now we subtract another $25 for network maintenance and leasing fees. This money goes directly to the people who own the physical towers. We are down to $40. Then, about $20 goes toward paying off massive corporate debt and licensing the core technology that makes 5G possible. After all these steps, what is left? The final net profit from your $100 bill is roughly $10 to $15. Ultimately, a telecom company sells you a $100 service, and their actual profit is barely $15. So, if the carrier is only keeping a small slice, who is eating the rest of the pie? This leads us to the invisible landlords of the digital world. Remember that $25 for network leasing? Most of it goes to a giant company you have probably never even heard of. American Tower, or AMT. Think of a family on a long summer road trip. The kids are in the back seat streaming movies to stay quiet. The parents are using digital maps to navigate. They are driving past huge metal towers on the highway, without even looking at them. American Tower owns nearly 220,000 of those exact towers globally. According to their latest SEC filings, they pull in over $11 billion a year, just by renting out steel poles. AMT operates as a REIT. That stands for Real Estate Investment Trust. A REIT is basically a special type of company that owns income-producing real estate and is required to pay out most of its profits to shareholders as dividends. By legally being a REIT, American Tower gets massive tax breaks from the government. Their business model is genius. They just build a steel tower once. Then, T-Mobile, Verizon, and AT&T all rent space on the exact same tower. It is brilliant. They are collecting rent from everybody at the same time. Their profit margins are incredibly high. We measure this using operating margin. Operating margin is simply the percentage of revenue a company has left over after paying for the direct costs of making its product or running its service. American Tower often boasts an operating margin above 30%. That is absolutely huge. They are the ultimate toll booth on the information highway. But even American Tower relies on something smaller, something microscopic. Without this next piece, those giant steel towers are just useless. Metal blocking the view. So, what is the actual brain behind the whole operation? You cannot send a high-definition video from a massive tower to a tiny phone without a very specific, highly complex language. That language is written in silicon. Enter Qualcomm. The ticker symbol is QCOM. Every single time an antenna talks to a smartphone, Qualcomm is likely making money off it. They design the vital chips that make 5G communication work. In recent quarters leading into 2026, Qualcomm reported revenues easily exceeding $9 billion. But here is the secret. They do not just sell physical chips. They sell the legal patent rights to the technology itself. This creates what we call an economic moat. An economic moat is a massive, competitive advantage that protects a business from rivals, just like a deep trench of water protects a medieval castle. Qualcomm's thousands of patents are an incredibly wide moat. Phone makers are practically forced to pay Qualcomm a licensing fee for almost every premium 5G phone manufactured in the world. They have built a virtual monopoly on the core communication tech. Even massive tech giants like Apple have struggled for years to replace Qualcomm chips. This makes Qualcomm highly profitable. But how do you, as a regular investor, know if their stock is cheap or expensive? Investors look at the PE ratio. The PE ratio, or price-to-earnings ratio, tells you exactly how much investors are currently willing to pay for one single dollar of a company's profit. A very high PE means people expect huge, explosive growth soon. Qualcomm often trades at a very reasonable PE compared to flashy software companies, making it a massive favorite for serious value investors. But there is a dark side to this perfectly tuned system. We have finally solved the mystery. Your money flows from you to T-Mobile, to American Tower, to Qualcomm. It is a perfectly legal, completely entrenched oligopoly. An oligopoly is a market, heavily controlled by just a few massive players who dominate the industry. Because there is so little real competition, these companies can essentially charge whatever they want. Let us look overseas. In parts of Europe and Asia, consumers pay an average of around $20 to $30 for blazing fast, unlimited 5G. In the US, it is easily 3 times that amount. Why? Because the US system is a completely private toll road from top to bottom. T-Mobile pays American Tower. Everyone pays Qualcomm. And the American consumer foots the final bill for all of it. The entire structure is precisely designed to extract maximum value at every single choke point. So, where does this wild game go from here? We are currently navigating through 2026. Artificial intelligence is completely changing every rule of the game. AI requires massive amounts of data to be transmitted instantly, without a millisecond of lag. This means T-Mobile will need even faster, denser networks. American Tower will need to build more infrastructure to hold heavier equipment. Qualcomm is already putting dedicated AI chips directly into your phones. The invisible money machine is only going to get bigger and much more powerful. But it does not have to be this way forever. How do we actually fix this broken structure? First, the government needs to aggressively encourage more competition. In the tower space, breaking up the real estate, monopolies could drastically lower costs for carriers. Second, regulators need to approve faster rollouts for new, shared wireless spectrums. This would naturally reduce the absolute leverage that a few chip designers currently hold over the entire industry. Lower costs at the very top mean lower phone bills for you at the bottom. What do you think about this invisible system? Look at your current phone bill right now. Tell me down in the comments exactly how much you are paying every month, and if you feel the service is actually worth the high price. Next time, we are going deep, inside the highly secretive world of AI data centers and we are exposing the shadow companies that control the electricity powering our future. You absolutely will not want to miss it. Make sure to hit that subscribe button and leave a quick like if you want to uncover more financial mysteries with me.